Behavioural finance and the science of emotional trading and what drives the actual market has been around since the markets began and is still around now, and is still a factor that probably determines the direction of the market over any medium-term time horizon. I think a lot of that kind of science is dependent on your time horizon, and so a firm like ours might be looking at, for example, arbitrage to arbitrage the asset values of two asset values at different prices. Whereas when you're a client and you're thinking about a trading strategy, you need to consider the costs of implementing that strategy, the time delays, and effectively the tools that are at your disposal. And so the emotional side of things and the behavioral finance side of things become more important because it's much more aligned to the type of time horizon that you would be looking at. Yeah, I mean, you get to a point of analysis paralysis when you're looking at the market and you're trying to figure out which science is affecting the prices at any particular point, and which science is going to be the most have the biggest impact over the time horizon of a trade. So, at the end of the day, it's about matching what you're looking for with the analysis that is most appropriate for that, and implementing a strategy that can be effective across both disciplines. I think human intuition is still a major factor, and there's certain things that just don't become available in any kind of information source. There's certain things that might make sense in a mathematical environment, but when you weigh up the practicalities of implementing whatever that may be, the trade or the volumes that you can do, or the costs of implementing that trade, the human intuition portion is something that's going to tell you, look, as much as that might make sense on paper, it's just not worth either the time or the trouble. The emotional side of things is something that all traders deal with, and so the difference between human intuition and emotion is one that is blurred. But emotion, as we define it in trading, is something that affects your ability to think clearly and implement the most appropriate actions at that time, whereas human intuition is actually the ability to do exactly that. And so, yes, there's always a continual battle within any trader's head and any investor's head to balance those two and ensure that they're not letting their emotions dictate their actions. And but still remains massively important in the market. And interestingly enough, it's probably becoming more important as computerized trading takes hold, because every so often you have these computers making a mistake, and they tend to follow on each other because it's not something that has really been considered in the development of the rules that dictate that trading activity. And so then you need the human intuition to actually realize that the systems are now confused and the humans should take over again.